Manager in Training from TFB Cambodia. Today I'm going to share with you the first lesson of financial market called Introduction to the Financial Markets. And talk about the definition of the financial market, instrument of financial products, and transactions, the benefits and advantage of all of the products. So, for more details, please follow.
What is the financial market? Financial market is the marketplace where buyers and sellers participating in equities, bonds, currencies, and derivatives, such as stock exchange or commodity exchange. A financial market can be a physical location, such as New York Stock Exchange or Bombay Stock Exchange, or electronic system called NASDAQ, National Association Security Dealers Automatic Quotations. The financial market can be found every nation in the world. The transactions takes two parts. One is the securities, including stocks and bonds. Second one is commodities, including precious metals or agricultural products. Type of financial markets. Number one is capital markets. There is stock markets, bond markets, and OTC market. 2 money markets, 3 derivatives markets, 4 forex markets, 5 spot market, 6 interbank markets, 7 equity market, 8 credit market, 9 commodity market. Capital markets. Capital market is the marketplace for buying and selling equities, debts, instruments. Capital market channel saving and investment between suppliers of capital, retail investor or institutional investor, user of capital, businessmen, government, and the individual. Capital markets are used to raise finance for long-term finance. Capital markets are used into 2 categories: primary markets and secondary markets. Primary markets. Newly formed securities are bought or sold in primary markets. Transactions in primary markets existing between issuers and investors. Primary markets. The companies offering the primary issuer initiative public offerings for setting up new business or expanding and modernizing the existing business. It is the market for the new long-term equities capital. Securities are sold for the first time or called as a new issuer market. Secondary market allow investor to buy and sell existing securities. The transaction of secondary market is investor and investor. This brings the question, why secondary markets? So if there are no secondary markets, it means that the company issue long-term securities to the investor. That means that investor lock their money for the company for long term. So how they can liquidate their money or convert their security into cash? So this brings the role of secondary markets, where the investor sell their security to another investors. These transactions the investor will receive in cash. Stock markets. Stock markets allow investors to buy or sell shares in publicly traded companies. That means any secondary trading of the stocks securities occurs in the secondary markets. Bond markets. Before going to the detail, you should know what is the bonds. Bonds are the securities where investor loans money for the definite period of time and pre-established rates of interest. The bond markets. The bond markets providing financings through the insurance of bonds, which enables the subsequent to trading. And they issuing bond by corporations, municipal, state or federal governments. Bond refer to the debt, credit, or fixed income markets. Money markets. Money market is the portion of money which trades highly liquid and short-term maturities. It can be short-term borrowing and lending, and maturity of market money is less than 1 year. They are certificate of deposits, bankers' acceptance, certain bills and notes, and commercial papers. Derivative markets. Derivative markets is the financial market that trades security that derive its value from its underlying assets. The value of the derivatives contract is determined by the market price and the underlying assets. The derivatives market products are forward contracts, future, options, swaps, and CFD, called contract for difference. Forex markets. The forex market is a financial market where the currencies are traded, and it's the most liquid market in the world. Commodity markets. Commodity market is a physical or virtual marketplace for buying, selling, and trading raw or primary products. Commodities divide into two types. One is hard commodities, two is soft commodities. Hard commodities are the natural resources that must be mined or extracted, like gold, rubbers, and oils. Soft commodities are the agricultural products or livestock, corn, wheat, sugar, soybeans, and pork.
Thank you for watching, and for more lessons, please subscribe to Vika YouTube channel.